Hello, good evening, everyone. My name is Sandra Esenam Afenu, and I'm here for business. Corporate governance expert Professor John Bright Aheto is calling for a review of the mandate of Governor of the Central Bank to restrain him from chairing the boards of the bank and the Monetary Policy Committee. This, according to him, will help strengthen corporate governance rules in the banking and financial sector.
The governor of the Bank of Ghana currently chairs the Monetary Policy Committee of the bank as well as the board of directors. However, many financial players have described it as inappropriate since the governor does not report to anybody except the president. The Bank of Ghana, however, launched a corporate governance code for banks and financial sector institutions last year to enhance the credibility of the sector. Governance expert Professor John Aheto believes the law can be changed to make the governor a member of the board instead of the chair.
They themselves are not. As I pointed out, the governor is chairman of this, is chairman of this, is chairman of that. It's not good corporate governance. Somebody must supervise him. So it looks like he's not accountable to anybody, except maybe the president who appoints him. And that should not be. The president should not be the reason why things are working. And he should not be working to the president. He should be working to a board. But the board, he is above the board. Technically, he can disregard the board and nothing will happen to him, as long as he's beholden to the president, which becomes a political issue. But we need to look at that law that makes him the governor, the chairman of the board, and the chairman of the monetary.
On his part, President of the Institute, Roxanne Dogbega, urged the Bank of Ghana to ensure full implementation of the corporate governance code issued to commercial banks.
Beyond the issuance of codes, otherwise beyond the laws, we need what we call implementation, compliance. We must comply to the laws and implement it. And it is the implementation which is killing us softly as a country. So it is not only in the banking sector that has a problem. It is a nationwide issue. It is a sectorial-wide issue. It is something that even goes beyond private organization. It's affecting our DNA. It's a cultural issue. The lack of compliance, the lack of implementation of policies is what is lacking.
Members of the Institute called on the media to support the quest by the private sector to improve corporate governance in the various institutions in the country.
Now, more property owners are being arrested for failure to comply with the mandatory fire insurance policy. A special task force of the National Insurance Commission, NIC, picked up occupants of some commercial buildings in Accra today as part of their operations to enforce the law.
The Special Task Force of the National Insurance Commission, NIC, arrested an official of the Regent University of Science and Technology, together with other representatives of companies, for failure to comply with the mandatory fire insurance under the NIC's laws.
At Regent University, they haven't done it, and then we've arrested the registrar. And then we require that within 24 hours he will comply, otherwise he will be arraigned before court.
The distress action is the second this year. Head of the task force, Joseph Bento, tells Joy Business the action is yielding some positive results.
The compliance has been improving, and any time we have come, all the people we picked, they happen to comply within the time we've given them.
So you feel the strategy is working?
Yes, it's working, but it's very difficult to sustain it.
At the end of the distress action, 9 representatives of various companies, including Talented Royals International School, were picked up and sent to the police headquarters. Enforcing compliance remains key to curbing the huge losses accrued out of commercial fires in the country. In fact, figures from the Ghana National Fire Service show Ghana lost 28 billion cedis in 2018, as against 25 billion cedis in 2017. Sections 183 and 184 of the Insurance Act make it compulsory for private commercial buildings, including those under construction, to be insured.
The Ghana Real Estate Development Association, GREDA, has warned that the poor performance of the cedi may soon affect mortgage costs in the country. President of GREDA, Patrick Bonfo, said clients might soon bear the brunt of the cedi's poor performance. He spoke to Joy Business at the association's annual breakfast meeting here in Accra.
The meeting brought together stakeholders in the housing industry to dialogue on crisis in the housing sector and the way forward. One of the key issues discussed was the high cost of housing as one of the reasons for the housing deficit in Ghana, which currently hovers around 2 million. President of the Ghana Real Estate Developers Association, Patrick Bonfol, explained that although developers have been absorbing the extra cost of production, the burden might soon be put on consumers should the cedi continue to fall.
If the situation were to be different, where we were using 80% materials, local materials, then the variation wouldn't be much. You see, currently, like I said, the market is stagnant, and so developers are not able to increase prices as much as they would want. So they are absorbing, these costs, and that means that the bottom line, the profit, margins, will be, affected. If it should continue, it will affect all businesses. I wouldn't even say just definitely.
He added that the lack of proper legal framework for the mortgage value chain restricts banks from investing in real estate.
The Home Finance Act of 2008, 770, unfortunately has some issues. It is intertwined with the 1972 mortgages decree. What we are seeking to do is to have a standalone law which will be very simple, which will be easy to implement, which will be more effective in addressing the issues that bedevil our industry. So in terms of mortgages, this is what we just want to look at, the legal framework. When that is straightened out, investments will flow into the sector on its own.
Some stakeholders from financial institutions and players in the construction industry were present. For Joy Business, Karen Dodu.
And then with that, we can make an informed.
Chief Executive of the National Petroleum Authority, Hassan Sampoli, has reaffirmed the authority's commitment to mitigating accidents at filling stations. He gave the assurance during the 2019 Safety Declaration signing ceremony in Accra.
I think it's important that we remind ourselves every now and again about what has happened in the past, and it serves as a guide into the future. Because when we forget what has transpired before, then we fall into temptation of going to sleep as far as safety matters are concerned. The industry is such that one more accident and then there are likely to be loss of lives. And we need to remind ourselves on a daily basis that this has transpired before, and then we look forward to a situation where we have zero or very minimal accidents, if indeed any accidents should happen in the future. So the essence of today's meeting is for us to get all the industry players to come and to have a symbolic signing of the safety certificates. Not that the certificate is important, but what it's put into our subconsciousness, that never again should we have such situations again.
Now, some good news for the mining sector as two new international mining giants head to northern Ghana for mining exploration.
It's important that government also recognizes that this is a virgin area. You are going to mine in an environment which hasn't got the history of mining, and therefore you need to do a lot of sensitization, making sure that people really understand what this whole mining business is about.
Right, so we hear from the CEO of Chamber of Mines, Suleiman Okone, when I return after 8 with more business and, of course, what's up on the commodity market. My name is Sandra Afeno. Please do stay tuned.